Disclaimer. This content is for educational and informational purposes only. It is not financial, investment, tax, or legal advice, and I am not a licensed financial advisor. The opinions shared in this video are my own and are based on my personal investing journey and experiences. Always do your own research and consider consulting a qualified financial professional before making any investment decisions. Investing involves risk. The value of investments can go up or down and could lose some or all of your invested principal. Past performance does not guarantee or predict future results. Nothing in this video should be interpreted as recommendation to buy, sell, or hold any security. You are solely responsible for your own investment decisions. Hello and welcome to Always Be Investing. Today is Monday, August 10th, 2026. Oil spiked, stocks slipped. Beginner lesson? One scary headline can move prices for a day, but it does not have to rewrite a long-term investing plan. Day 24. Today invested $100. Total invested $2,400. VTI, total U.S. stock market. WTI oil, plus 5%. Stocks edged off record highs as energy prices revived inflation worries. What happened today? Stocks slipped from records as oil jumped and tech weakened. Day 24. Dow, minus 0.11%. S&P 500, minus 0.06%. NASDAQ, minus 0.32%. Russell 2000, minus 0.56%. 1. Oil surged. U.S. crude settled around $82.13 a barrel, up about 5%, as hopes for a quick Strait of Hormuz resolution faded. 2. Tech weighed. Nvidia fell roughly 2.9%, and Intel dropped about 4.1%, helping drag the NASDAQ lower. 3. Still near records. The S&P 500 had just closed at a record Friday. Monday looked more like hesitation than panic. Beginner takeaway? A small red day can still contain a big lesson. The headline was oil and inflation, not a broken stock market. The big story: oil jumped 5%. Uncertainty around the Strait of Hormuz put an energy risk premium back into the markets. Plus 5%. WTI crude, $82.13 a barrel. Monday settlement. 1. Supply risk. The Strait of Hormuz is a critical global oil shipping route. 2. Uncertainty costs money. When traders fear disruption, they often demand a higher price for oil. 3. Stocks notice. Higher energy costs can squeeze consumers and businesses. Why oil matters to stock investors. Oil can feed through the economy and change what investors expect from the Fed. 1. Fuel and shipping become more expensive. 2. Businesses may face higher input costs. 3. Investors worry price pressures may persist. 4. Higher for longer rates can pressure valuations. The chain is possible, not guaranteed. Markets move on expectations before the final economic data arrives. Next big checkpoint, CPI on Wednesday. The market now gets fresh inflation data on August 12th. Wednesday, August 12th. July CPI report. Inflation checkup. 1. If CPI is hot, investors may worry rates stay higher or rise further. 2. If CPI is cool, markets may breathe easier about inflation and rates. 3. Oil complicates it. Today's oil jump reminds investors that inflation pressure can reappear. 4. One report does not equal the future. CPI can move stocks for a day. It cannot tell us what VTI will be worth decades from now. ABI lesson: learn what CPI means. Do not build a retirement plan around guessing Wednesday morning's number. The Fed has a conflicting picture. Weak jobs data argues for caution. Oil and inflation risk argue for restraint. Weaker jobs. July payrolls unexpectedly fell by 23,000. Potential message to the Fed: don't squeeze the economy too hard. Higher oil. Energy prices jumped sharply Monday. Potential message to the Fed: inflation risk is not gone. Markets hate certainty? No, markets hate uncertainty. Today gave investors two competing signals at once. Why the Nasdaq fell more. Chip stocks took the brunt of Monday's selling. Nvidia, minus 2.9%. AI chip leader weakened. Intel, minus 4.1%. $15 billion share sale plan. Beginner lesson: a heavily weighted sector can make one index move more than the broad market. Why this matters for VTI. VTI owns the whole U.S. market, not just the headline of the day. Technology, healthcare, industrials, financials, energy, consumer, small caps, large caps. VTI equals built-in diversification. Today was a live diversification example. VTI barely moved while tech-heavy indexes felt more pressure. VTI, minus 0.4%. Energy strength helped offset weakness elsewhere. Close, $381.63. NASDAQ, negative 0.32%. Chip weakness made the tech-heavy index move more. Close, $26,605.36. Diversification does not prevent losses. It spreads your exposure so one theme has less power over the entire portfolio. What not to do after a day like this. Short-term headlines are information, not automatic trading instructions. 1. Don't panic. A 0.06 S&P 500 decline is not a crash. Markets can wobble near records without signaling disaster. 2. Don't chase oil. Oil jumped today. That does not mean energy will be tomorrow's best investment. 3. Don't predict CPI. You do not need to know Wednesday's inflation number before everyone else to build wealth. The ABI habit is boring on purpose. Learn the news, understand the risk, keep investing consistently. Day 24. Today's $100 goes into VTI. Current value, $2,464.18. Oil surged, tech slipped, inflation worries returned, the plan stayed the same. Today invested $100. Total invested $2,400. Trading day 24. The habit: learn the news, understand the lesson, keep investing. Follow the journey. Always be investing. $100 into VTI every trading day. Beginner lessons from real market news. Follow us on YouTube, X, Instagram, and TikTok. Day 24 complete. $2,400 total invested. Subscribe, learn, invest, repeat. I'll see you tomorrow.